Well, let's move right on from one set of numbers to another, and it's Sobha Developers that has also put out a very strong set of earnings. You have their operational performance, which has increased. The top line growth has come in a little bit muted at 658 crores, but nonetheless, the pre-sales volumes are up 20%. JC Sharma is the VC and MD, and he now joins us on the show. Good to have you with us. Thanks much for joining in. So, start off by telling us what the impact was on account of the new accounting changes, and your contract manufacturing as well seems to have done quite well. So, what are the triggers here?
Thank you and good morning to all of your viewers. See, the accounting standard 115, what we have introduced from the first quarter onwards, allows us to recognize the revenue on completion basis, where the real estate revenue can only be recognized once we perform our obligations. So the comparable data is not possible of these 2 quarters of this financial year versus the last financial year similar quarters. Had we followed the earlier norms of accounting standard 11 and 18, our performance would have been further up, the top line maybe by 37% and the PAT by 44%. We would have achieved a top line of 900 crore. But be as it is, even during this new accounting method what we have followed, we have shown quarter-on-quarter growth, we have improved our cash flows, we have improved our operational margins, we have improved our PBT and PAT, and primarily, as you have very correctly put it across, the contracts and manufacturing division, it has been doing well, as well as the operational performance the way we have been displaying for the last 2 quarters. We are showing a double-digit growth on the operational performance also. So as we move forward, the same will get reflected in our top line and as well as in bottom line, duly supported by the contracts and manufacturing division. So we believe that this financial year also will be a great financial year as far as our company is concerned, in an environment which still remains reasonably tough.
Could you quantify for us as to how much of your total house sales were largely done by NBFCs, and now if there is a crunch by NBFCs, could that have an impact on your sales?
See, it's a good point. When we look at NBFC also, there are 2 sets of NBFCs we need to understand. You have HDFC, you have PNB Housing, you have LIC Housing, you have Canfin Homes and others who have not been impacted by the problems what we see. Then there are few private sector NBFCs where we have seen in some cases where they have not been paying on behalf of even the existing customers their portion of the loan disbursement. But at the same time, they are assuring that the payment will be made, and the delay is almost 2 to 3 weeks. We believe that they are going through with that asset liability mismatch syndrome, which should be resolved probably by this month end or so. We are not an expert, but in our case, when we look at the so-called market share of these companies, it is not even in double digit, it is in the lower single digit kind of a thing, and we believe that as far as we are concerned, it may not have a great impact. We also do not borrow from such companies as a corporate, so we have otherwise also zero impact. But yes, where they have been exposed as B2B to the developers, or they have been giving money to those ineligible guys, in our case 80% plus of the customer base remains professionals who have got a salaried income, and they get money at relatively good rates from say SBI or from other financial institutions, may not get impacted. But yes, this issue needs to be taken care of to ensure that the orderly growth in our sector does not get impacted.
If we're looking at your order book, that growth as well has been quite impressive in the contract and manufacturing segment. Is this just a one-off, or do you think that this growth is sustainable? Give us some targets that you're working with.
See, we achieved almost 900 crore or so of the top line recognition in the last financial year. We are aiming at growing it to 1200 crore in this financial year, and we are well on our target. We believe that with an order book of almost 2300 crore in our hand, we should be growing this business double digit, at least in the near foreseeable future. And the similar thing also goes for the real estate residential space also, where we hope to continue to grow on a double digit basis.
You're confident of a double-digit growth, but if I look around and ask anyone what is the outlook on real estate, the answer has been demand is bad, sales are not happening. So it amazes me that when I speak to some good builders, they don't have any problem, yet the dipstick in any market, whether it is Bangalore, Mumbai, Delhi, Lucknow, Kanpur, nobody is excited about buying or owning real estate or investing in real estate.
I would not be able to comment upon that, but yes, generally speaking, as I say, the market remains tough. But at the same time, we are seeing the guys who are the first time buyers, the actual buyers, who would prefer to buy when they believe that their disposable income and the eligibility today allows them to buy home relatively early in their life phase. And they are buying the homes. You have looked at our growth where the per square feet realization has come down, but the margins have remained intact, and our strategy to have shifted to the smaller units has paid off. At the same time, we are also conscious of the fact that the consolidation is the order of the day, and in that consolidation process today, if a customer has an intrinsic and inherent belief in a reputed developer's completion schedule and its past performance, they are taking the call of buying during the construction phase. But where they have seen the track record not up to the mark, those developers definitely are seeing the dip in their sales volume. So while the market as a whole in 2018, in my view, will grow bigger than what it has achieved in 17, and 17 was a better year than 2016, but if you look at from the peak of 2012-13, even now also we have not achieved those volumes. So you will see somewhere inherent contradictions, but within the contradictions, this consolidation is allowing few developers to show better numbers at the cost of the market growth.
All right, now you've given us a perspective as to how things have shaped up in terms of the overall demand despite the kind of feedback that we seem to be getting on ground. So let's talk about where we have seen your sales improve. That's been primarily Bangalore and Gurgaon in the quarter gone by. So what are the kind of trends that you've witnessed there? Even in Kerala, the volumes were impacted due to the excessive rainfall. Any specific impact from Kerala exposure? And what are the trends that you see? Which is going to be promising areas or pockets for you?
See, for our growth, we consider Kerala as a great market where we want to take our total volumes to a million square feet new sales a year in 3 years' time. We have invested a lot in the Kerala market, and we believe that this is the market where we can sell more and can continue to enjoy the market leadership. At the same time, certain exceptional events do take place which impacts the volume as well as the cash flows. We are conscious of this fact. We believe that from the December onwards, when this season begins of the NRIs returning to Kerala, that the sentiment should revive, and from next month onwards things should begin to look better. We also believe that as a whole, this financial year, despite the setback of about 4 to 5 months in our volumes, Kerala will continue to perform better, and this year also will show a better performance overall than the last financial year. Coming back to the Gurgaon also, we believe this is one of the most organic, genuinely growth-oriented market in the north, and we have invested a lot, and we are investing a lot in that market. We believe that we have a role to play, and in the years to come, Gurgaon as well as the NCR as a whole will be a great market for Sobha. At the same time, the Bangalore is the real market. We have got a good land bank and the good pipeline of new projects being launched even in this financial year as we talk. So here we should continue to ensure that we keep maintaining this market leadership and provide the kind of products which the market can accept in the near future. And that way you will see that from 1,000 square feet apartment to 4,000 square feet, luxury products will keep offering to the customers. And that is how we believe that we can grow double digit for next few years as far as residential space is concerned.
Okay. Thanks very much for joining us and giving us those details. That's Mr. J.C. Sharma, Vice Chairman and MD of Sobha Developers, talk about the business outlook for the real estate major going into the future. That's about 1.25% higher as we speak at 470.